recapping this week's key events that we have observed. Let's start off with the hot one in the UK with the Bank of England. Now, they did hike rates by 25 basis points, largely anticipated by the markets. But what was accompanied, was this seen as a dovish hike by the central bank? Now, for me, as I said, personally, I really feel like they're hitting and hoping for the best with this hike. And I really didn't establish, I don't know if it's just me, but I didn't establish any real credible reasons as to why the Bank of England have gone and hiked rates. Essentially, it's just like they've been backed up into a corner by external parties and they've gone and hiked rates. And as I say, looking for the best outcome on the back of that. In terms of future rate rises, what the markets were really listening to, that is very much going to be dictated by the progress with Brexit at the moment. As we know, the economy is not in the best of shapes and there's a lot of uncertainty. So that is going to be dictating policy going forward, made very clear by Carney. So what this means essentially is Brexit once again is going to be driving the pound. So any developments with that will most likely have a heavy influence on sterling then, guys. Looking over in the United States of America, let's look at the FOMC then. In terms of their rate decision, no change as expected there in terms of policy this time round. Markets did really perceive this themselves as quite upbeat and hawkish because one single word, they noted that the growth in the US is now solid. Is the wording they use. But personally, after diving into the report, I discovered they've put in a little caveat, being very cheeky, giving themselves an escape route essentially. And they noted that essentially, in terms of the base rate, the main rate for the Federal Reserve, it's not going to essentially move, it's going to be lower than what markets originally anticipated. So essentially, they're not going to move as fast as markets were projecting in terms of their tightening and rate policy and raising rates then. So for me, I saw that as quite dovish, so we could see a slowdown in 2018 when it comes to interest rate rises there. So do be prepared for that influencing the dollar into 2018 and beyond. And elsewhere, we did actually see Trump appointing Powell as the replacement for Janet Yellen, so he will be stepping up for the next term. This is dovish because I tell you why. He essentially replicates the views of Yellen. They share the same views essentially. So we're not going to see any drastic changes in terms of policy going forward for the Federal Reserve. So that could weigh on the dollar also. Lastly, they're looking over in Asia, in Japan. The BOJ did come out, as I gave you the heads up at the beginning of the week, they did lower their inflation forecast then. So what this means is it's giving them more room to carry on with their aggressive stimulus measures, remaining ultra easy. And as a result of this, we did see broad yen weakness, very notable against some of the other currencies, and expect that to continue as the BOJ do remain aggressive in trying to bring up inflationary levels, as they still remain dangerously too low for them. Other than that, that's it from me. I hope you've had a smashing trading week, and I look forward to reporting the key events next week. Thank you.